Good afternoon, traders. This is a live trade recap. I took 3 trades this morning right at the market open. I'm going to show you everything that happened with those. I'll tell you right off the bat, I got stopped out of all 3 trades on the penny on the last trade, and then the thing took off and went to 2R very easily. We'll go over some things that will be changing in the future with this plan, but I'm not going to reveal too much because we are switching up to small caps as soon as we finish this plan. So this is 96 out of 100 trades with this plan. Let's take a look first at the screener. I always like to show you the screener. Now, the screener looked a little bit weird this morning, but there was a single stock that met my criteria. So, there was no break in the plan or anything like that to take these trades. This did meet my criteria 100%. So here is my mid-cap screener. And first of all, let me point out KDMN. This looks really enticing, especially if you're new. You're seeing this, oh, it's up 72%. That looks awesome. Well, this is one of those stocks that if you pull up the chart, you'll see that it just moved sideways. It gapped up out of nowhere in the pre-market and then just moved sideways throughout the rest of the pre-market. Anytime you see that, I would suggest avoiding those stocks, because at least for that day, because they generally just continue sideways, and this is exactly where it was this morning, around 72%, so it hasn't moved at all. And the one stock that was up was SWN. It met my volume requirement. It was well over 2% of a percent change. And you can see everything else is red pretty much. SPCE was well below 2% when I was trading, and this wasn't up there as well. So it was clear that SWN was the only thing that I could possibly take a trade on, and it did meet my chart and my pattern requirements. Let's take a look at that right now in the video. So, okay, first of all, here's KDMN. That was the one that I showed you at the beginning, and you could see how it just gapped up. Let me go back a little bit. It gapped up in the pre-market, maybe even the aftermarket. Yeah, this is just pre-market, and it just went sideways. So anytime I see that, I just avoid those altogether. They generally just continue sideways or sell off at the market open. And then SWN, let's take a look at it on the daily chart so you can see that it met my daily chart criteria. There it is right there. So it's above the 200 MA. This is the 200 MA, and now we just need to find the previous high, which was 522. It was from the previous trading day. So we marked that out, and we can see the price is already trading above that level. So that means that my trigger to look for an entry has already taken place. It happened on the very first 1-minute candle. So now I just need to wait for a pullback, and I take the first 1-minute candle that makes a new high. So let's go forward here, just waiting for the pullback now. And decided this is, it was clear this is the only stock that gave any opportunity that was on my mid-cap screener. So there was nothing else for me to look at or watch or anything like that. So all I needed to do was to get triggered for an entry. So here it comes. So I was waiting for it to break the high of this candle, which it didn't. So then at the next 1-minute candle that opens up, it breaks the high of this one. So that triggers my entry. So it's going to happen in 3 seconds. As soon as that candle opens, it pops up. There we go. And that's my entry triggered. And I get filled at 528. And then I need to move my stop loss up. Since this is a consolidation area, because all of these candles are kind of have the same bottom, I move it just below the consolidation area, the stop loss. And then my profit target is always 2 times my risk. So everything is all set now. The trade takes care of itself. I don't have to do anything. But if I get stopped out, I have to look for the next entry. So just plugging things into my 2R calculator just to double check everything, and stopped out. So now I'm just waiting for the next entry, and that's as soon as the 1-minute candle makes a new high again. Okay, so here we go. So the high is 524. So if I see 525 or better, then I trigger my hotkeys to get in, and that's what happened there. And again, the stop loss now. So this is not a consolidation. This has this kind of clear V pattern. So this is a low, and then my stop loss goes just below that level. Actually, I'm sorry. It would have gone below that level if I would have gotten triggered on this candle, but I did not. I got triggered on this candle, so it goes just below the low of this candle here. And you might think that's a really tight stop, that I should have gone below the low of this candle, but my plan tells me that this is the right place to put it. And if I would have placed it over here, I would have just lost 1 more cent per share, as you'll see, as the trade does stop me out. And it goes all the way down to that 521 level. There we go. You can see it touches the 521 level. So now, again, just waiting for the next entry. There it is right there. So this one was kind of weird. The way this thing was moving, it was moving really like a low volume stock, although it was probably the 4th or 5th highest volume stock on the mid-cap screener. It had like 1/10 of its average volume after the first few minutes of trading. So that is pretty high volume relative to its normal volume. It was well over 1 million shares right after probably like 9:32 or something. So it had the volume, but it wasn't acting like a stock with a lot of volume. So let's see. So the high of this candle is 524. So now I'm just waiting for 525. Let me show you what happened on this entry. It's kind of weird. So that you see it kind of like popped up for a split second. Now, if I could have caught it at that 525, that would have been fine, but it comes right back down to 524. So I try to let it hit 525 again before I take my entry, and you see once it did, then I got in. And the reason for that is because if this trade works out, which it's more likely to work out than the last two, then that extra 1 cent will actually add 2 cents per share to my profit. So it makes sense. I mean, that's my ideal entry anyways, 525, not 524. In this scenario. So once again, my stop loss is placed just below the low of the previous candle that I entered on. This is what I've been doing for a very long time, and it works out in the long run. It doesn't always work out on each individual trade. Nothing does. So you can see what happened here as I get stopped out. But now let's take a look at the chart. And I'm sure there's going to be plenty of people saying, well, you should have done this, you should have done that. Doesn't really matter. Whatever's in my plan, that's what I do. And that's the only way that any of my data that I'm tracking makes any sense. If I do one thing on one trade and something else on another, then my data is completely meaningless. So let's take a look at the track now with SWN. I mean the chart, not the track. The chart, and we'll see. Not the singles chart. Let's go to this view. So here's SWN, and this is where I got stopped out on my last trade, and you can see what happened right after it took off. So obviously you can look at this chart and say, oh, well, why didn't you take the trade here? I mean, the hindsight is 2020, but and there's nothing to say that this thing didn't continue to sell off. That happens all the time. It happened to me on the last trade that I took. So there's no way of knowing that this is going to happen, but here is a couple of things that is going to change with this plan once I finish the testing. Well, I'm just going to say this, is that first trade would not be a valid entry. So we would have eventually caught 2R on this run up. And once I start trading the small caps, none of those trades that I took are going to be valid entries. And I'll get to that when we start trading the small caps. But that's just a little bit of a teaser there. So what this tells me is that I picked the right stock, that the screener gave me the right stock, and my entry trigger, I think, was fine, or at least my trigger to look for an entry was fine, because what I mean by that is that this previous high, the fact that the price broke through this previous high, is a sign of strength. That's why I mark out the previous high, and that's why that's in my plan. And that's why I don't take a trade unless it breaks out through that previous high, because I'm assuming that when the previous high is broken, that means that there are buyers there and that there is strength in the stock. And that is apparent here because this thing took off afterwards. Did I get in a little early? Yes, but I traded my plan 100%. So the only way that a trade like this would work out is obviously some changes to the plan. You can't write a plan around one single trade, and that's not what I'm getting to either. If you write a plan that makes this trade work every time, that doesn't mean that you're going to be profitable in the long run, because not every single trade is going to play out like this. So don't make that mistake. So what I'm doing is the changes that I'm talking about, which we'll get to when we go over this plan after the 100 trades are completed, is based on those 100 trades, not just based on this trade or a handful of trades. So we're going to get to all that stuff in time. We're almost there. We're at 96 trades now. Only have 4 more to go to get to 100, and we'll go over everything we learned, and we'll also start the small cap test trading. So anyway, let me know if you have any questions about this. Feel free to make a comment in the comment section below, but just know that everything I'm doing is 100% to my plan, so there's really nothing else I could have done differently. And other than that, always stick to your plan. Make sure you go into every trade with a plan, first of all, and stick to it no matter what. And then always take your stop losses onto your profit target, and in the long run, you should be green. Take care.